testing your patience, right?
Thanks
for
for
months
inviting me.
now.
Yeah, so I guess it's, which is what I spoke last time also, that the earnings have been disappointing. And once we get the earnings, I guess the markets will start to respond to those earnings. So we saw early signs of earnings revival, but on the whole, if I remove the commodity and the oil marketing companies, we are still in single-digit earnings growth. We don't expect single-digit earnings growth for the valuations that we are trading.
Yeah.
So we think that the earnings will revive next year. So as the earnings revive next year, hopefully the new year should bring in more cheers. That's how we see it.
How much of that is penciled in, Sridhar? Because markets are forward-looking. Everyone's expecting that earnings revival to come through. How much of that earnings growth is already penciled in? Do you expect a positive surprise where earnings growth is concerned next year?
Yeah, so I think, I'll take a minute on this. So I think the government was too focused on investments for a very long period of time. And what happened is that consumption as a theme had literally, nobody was talking about consumption. We've seen a flip in that from the GST cut that we saw. And what we understand is the government is struggling to, even execute the investments that they have penciled in the budget, which is about 10.5, 11 lakh crores. They may not even reach that number. So I think this, and plus if you add to the budget where they had cut some tax rates, I think all this, it takes about 6 to 12 months for all this to play out. So we think that these are very positive moves. We do need investments, but we need some focus on consumption also. Plus this over focus on inflation hasn't really helped. So if the nominal GDP growth is single digit where it is right now, it actually hurts economy after a point of time. I think the government and RBI have flipped. Our view is that we'll see rate cut now. We could see another rate cut. RBI's inflation numbers are way inflated. They'll have to bring it down by at least 100 basis points for both for Q3 and Q4. If I put all this together, it will start playing out in the next year. And that's how I said that we should get at least, we think 15% earnings growth for next year. Okay, so which is a fairly strong number. So that will mean that as these earnings start to reflect, maybe in Q4 we'll start getting early signs, then the market should reflect. That's how we are seeing this. It is also predicated on a rate cut now. We think there should be a rate cut. In fact, we thought there should be a rate cut.
The governor also said that last evening.
Yeah, but how the MPC plays out, we don't know. We haven't seen such inflation numbers, Aisha, before. If you remove the gold impact, the CPI is negative. So, I mean, what are we trying to do here? That's my question. You need inflation. I mean, for an economy which is 2,500, 3,000 per capita, you can't have zero inflation. I mean, we get into a different trajectory if the inflation is so low. I think the over obsession on inflation has led us here. Fortunately, I think there is a pivot, which is both the government and RBI have realized that something has to change. And I guess a lot of the actions that we are seeing in the last 6 months, right from 15th August announcement, is from that, because I'm sure they also see the number that we are seeing. And we've been saying this for almost 6 months, that inflation numbers are going to be very low. So I am happy to see the pivot, and I think this are all steps in the right direction. And we think if all this plays out, we'll start getting strong earnings growth next year. But it's a crystal ball gazing. I mean, it's easy for me to sit here and say we're going to get 15%. A lot of things have to fall into place. We haven't spoken about, global macro. I mean, those are the real big question marks, but that's how we are seeing.
What will it take for the nominal growth to go beyond 10%? Where we are hovering between 7 to 8.5% as of now because of the low inflation which is coming into play. And you are penciling in 2 rate cuts, maybe 25, one in December and one in Feb, which is there. What is the total rate cut that you are penciling in, given the fact, Q2 numbers are going to, GDP so is going to be around 7.5% or so?
So I think that is the big question mark here. We all know, and I think there's a statistical aberration in the GDP. On the ground, it doesn't feel 7.5. I mean, everybody will accept, and I'm sure in private meetings, even the government will accept. When your nominal GDP is single digit, so because your GDP deflator is so low, because your WPI is literally zero.
Yeah.
So this is a statistical aberration. This will reverse next year. So if I am RBI, I'm making policy 4 quarters ahead numbers, based on 4 quarters ahead numbers. I know the statistical aberration will go. So will I be looking at that? If I was in the MPC, I will be looking at that. I don't know how the MPC looks at these numbers. So I will ignore the very strong GDP number which is going to come, because I look at the nominal GDP. Government's fiscal deficit is based on nominal GDP. They will miss the fiscal deficit number if we are going to get a single digit nominal GDP growth. It's important to stress this because I don't see enough people talking about this. This is a big problem. A low nominal GDP causes low earnings growth for the market. We need 4 to 5% inflation. If we don't get that, earnings growth will not come. This is exactly the problem for this year. Our low nominal GDP growth. This is a problem for the government also.
And that's why the government will not be spending much to meet the fiscal target.
Exactly. So it is a circular thing, right? So if there is over obsession on inflation, and a lot of people say that it is because of food. I'm saying remove food. Look at WPI. Even that is zero. So which means that corporates don't have any pricing power. The demand has been very poor. As simple as that, and that is reflecting in the earnings growth number. So as I said, I'm happy that the government has pivoted. They've cut the GST. They're looking to boost consumption in various ways. So I think these are steps in the right direction. If things fall into place, maybe we'll start to move from next year.
But what more can the government do, Sridhar? I mean, all that they have done from, the income tax slab adjustment to the GST rationalization to the labor laws tweaking now. What more can propel consumption?
No, I don't think the government needs to do anything more.
Yeah.
I think, as I said, the pivot from investment to consumption, this was critical. There was a phase when you needed to do that investment. So I'm not criticizing the investment. You needed that. But there are times when you need to shift because of global issues, like we got from the tariff issues, we got some
and I bet that is also still an overhang, right? That there is no trade deal yet.
So I think the government has moved in the right direction. I think RBI in the previous governor's later tenure, they tightened a bit too much, and the inflation numbers were looking that it's going to be very benign. If you go back to beginning of the year, RBI was expecting 2% inflation for FY26. We are going to get sub 2%. They were expecting 4%. So you were wrong by almost 50% for RBI to get the number so wrong. Serious questions have to be asked on their statisticians and their data collect. And we've been saying from June that the RBI numbers are wrong. It's not a forecasting error. It's a mathematical calculation error which they have made. But it's difficult to question RBI on a lot of these things. That resulted in you being a bit more tighter, where you should have actually cut more aggressively. More liquidity should have been given. Fortunately, they have turned, and it looks like we'll get another rate cut. Hopefully, all this will play out as we speak. As I said, I'm hopeful for the next year.
Where does the terminal rate go, and how many cuts are you foreseeing now over the next year or so?
See, I think we can easily do 2 more cuts.
Okay.
And then it depends on
25 bips each.
25 bips, yes,
sure.
Exactly. And then it depends on how US Fed moves. If they are more accommodative, then some room opens up. You have to also keep in mind that RBI has multiple things to handle, including currency.
I was going to ask you
just
that.
So when you look at the currency and then you look at where is the US 10-year and where is our 10-year, the gap hasn't been so narrow for multiple years. So I think it isn't an easy job for Reserve Bank. It's easy for me to sit here in the studio and give gyan and bhashan, but they are handling far more difficult. Their job is far more difficult than ours. But I think there is enough room. I think at least there's 50 basis points room. Think about it. Mortgage rates today are 7.25, somewhere in that range.
Yeah.
We haven't seen a sub 7% mortgage rate for a very long time.
Absolutely.
Yeah.
So let's talk about your job as an investor. What is it that one should do? That's what you know best.
Yeah, so I think this is the time to start building in portfolios, more inward looking than outward looking. So we think financials should do well we think the rate cycle is ending. So banks should do well in the in the next financial year. Obviously, NBFCs will do very well because the cost of funding is low, and we think it will be lower rates for longer. So we don't see inflation really spiking up. So it's not like RBI needs to hike rates the next year, unless there is a global catastrophe or something like that, which I can't predict. If we get lower rates for longer, then rates will be lower, should benefit NBFCs. Consumption should do well, discretionary consumption. And then it's more stock specific. We like pharma, we like some commodities. I've been a bull on gold. I think that will continue to do well.
Sridhar, if you began the show by talking about the valuation issue with the frontline and flagship companies, what about the broader markets? We've seen a larger correction happening there. While there has been a diversification by many investors getting into small and mid cap companies, you see these companies coming back into, because the earnings have been much better or faster than the large companies for them.
Yeah, I think many people have spoken about this. The mid small cap valuations were trading at a substantial premium to the large cap valuations, and it wasn't as if many of them were giving substantially higher earnings. So some of the mid caps also struggled with poor earnings growth. So if the earnings are strong, those companies have stayed. Where there have been earnings disappointment, those companies have corrected far more than what you would have expected, because there was a consensus. So there was overhype in some of these stocks. So I think this is cycle. This is how markets play out. Eventually earnings will drive. So if the earnings are good, some of these stocks which have corrected will come back.
You said you are bullish on gold, but if the Russia-Ukraine peace talks comes through, then you'll see a correction in gold coming in.
So I think the gold piece also because of what central banks are doing, which is they're printing more money. Look at the fiscal deficit of the US. When have we seen 6.5–7% fiscal deficit for US and nobody has talked about it? The other issue is more central banks are diversifying from dollar assets. And what is the best option for them? I don't think everybody is comfortable with crypto. Then you have only gold as an option. Look at what our own central bank is doing. I don't think this changes. It is not like you're going to get 50% return on gold every year. Our base case is that you get 6–7% return on gold. Our currency depreciates by about 3–3.5%. So you're talking of a double-digit return over a normalized period. And every once in a while you get these sort of returns. It doesn't mean that gold gives you positive returns every year. It doesn't. But if I take the last 25 years or last 20 years or last 30 years, gold has matched Sensex returns almost for every period, and in many periods it has outperformed. So my view has been that you should at least have 10% of your financial savings in gold, because it gives you a hedge against the currency also, which people miss. That a large part of the return also comes from the fact that our currency depreciates by 3–3.5% at least every year. Now the governor himself has said 3.5% depreciation. So that's how I see gold.
But in the calendar year ahead, you think India equities will give more return or gold?
If I knew, like I was bullish on gold, if I had known gold was going to give me 50% return, I wouldn't have held any equity at all. So I think it's crystal ball gazing. I don't know, and I don't think anybody knows. And if somebody says they know, then
they're gone.
Yeah, I don't think even God knows. So I guess that's the challenge with commodities or markets in general, right? You don't know. So you're basically trying to project based on certain assumptions. I've laid out my assumptions, and this is what I'm expecting. So I'm expecting over a period 10–12% return from gold, which I think is fair, because the last 25-year returns has been 14%, which is in line with what the Sensex has given. So I shouldn't be complaining too much about it.
But asset price correction will happen if these peace talks go through. Do you think so?
I don't know if asset prices will correct or not, because there's too much of money chasing assets right now. So how it play out, how it's going to play out, I really don't know. And the other thing is, too many macro issues, like now people are talking about the Japanese bond yield.
Yes.
So, too many things are at play right now. If you ask me the biggest risk for the Indian markets, it is global macro rather than India. I think the Indian macro is looking stable. Government is on top. Reserve Bank, I think, is on top right now. So we are fine. But if there is a global macro issue, will that hurt India? Of course it will hurt India. So will our markets correct? It will correct. Even though it didn't participate, it may still correct. But I guess it will correct lesser than what other markets will do. That's how.
But when you say global issue, it's just about the Fed move or something other than that?
No, it's the Fed move. What happens to this AI bubble? How it plays out? Because there's been massive over investments. I mean, I just saw that all the big seven are now raising large amount of debt.
Yeah.
I mean, they were cash-rich companies. Now they're raising debt to fund their
Capex,
to fund their capex. How this plays out, what happens to Japanese bond yields? I really don't know. I mean, what all can an Indian fund manager track now? It's becoming really complicated. So rather than looking at stocks, you're looking at all around you. So obviously it means that we are worried about what is happening around us rather than what is happening in the market.
I'm going to push one last question through. 15 to 18% earnings growth. That's really the headline, FY27. What will be the initial hint that will come through? Will it come through? Will that initial hint come in H2? Or will we see that only in Q1 FY27?
No, it should start showing from Q1. Keep in mind that I think financials will lead it because they have a very low base.
Sure.
So we've had literally no earnings from financials in this year.
Yes.
But
if you pencil in 2 rate cards,
so what will
continue to be?
Yeah. So what will happen is a large part of the rate cut related, the reset has already happened.
Sure.
There isn't much. We're not talking like we've had 100 basis points of rate cut. We're talking of 25, easier for the banks to absorb. We think that financials itself should give you about 12 to 15% earnings growth. Then all the other consumptions put together should add up. So, that's our assumption. Let's see how it plays out.
With so much to track, I hope you're getting time for the safaris.
Of course. I was there. Over the weekend, I was there in a jungle. So, it's always good to be with nature.
Good sightings?
With nature.
Good sightings during this?
Yeah, so I went to a very obscure jungle. It's called Malupura in a remote corner of Satpura.
Yeah.
Nobody goes there. And I was surprised that I got 10 tigers, mother with 3 cubs, mother with 5 cubs. And I was just, those are the pictures. I was telling my friends that, I'm like a mid-cap fund manager who looks for value options. So I don't go to the larger parks. I try to go to these smaller parks where nobody goes. And when you get bumper. Otherwise, you cut loss and come back.
So that's what
I
Indian
doubt
fund
when it
managers
comes to
are.
tiger sightings, you ever cut losses.
But
Your tiger luck is really good.
As touch wood for now, it's been very good. So please join me as long as my luck is good.
Yeah.
All of you are welcome.